Good afternoon, traders. Hope we are all doing well and having a phenomenal journey. Okay, today I'll be doing my trade recap, which is for December week 2. I took two trades, one loss and one win. However, I had a trade which I was holding during the weekend, and that is the reason why I did not drop my trade recap last week. And the trade pair is euro dollar. Okay, let me get into euro dollar and what I was looking for into this trade. I've got price moving into a bearish momentum, so it was clear to me that if price is going to be consolidating towards this area, so I'm going to be labeling it as an area of interest because we've got a point right there where price could simply still go for the downtrend because on the DXY price shows indications for bullish momentum. So on euro dollar could be moved onto the downside. So I've got price consolidating towards this area of interest. I move on to H4. Nothing complicating, just simplicity. I spot a hook point. This is where price had built volume. So I use this as a hook point. So it's a hook point right there. And price is consolidating towards the hook point. So it forms a 1, 2, 3. 1, 2, 3, which is clear on the H1. So we see our clear 1, 2, 3 right there. Simple 1, 2, 3 and price hover. So it's 1, 2, 3 hook point, and I put my 90% rule of the structure. That is where I'd be targeting for the minimum, whereby if price is going to be consolidating towards this area, then I'll be happy to take the profit, which will be about 3%. So here this was 3.92, which was beautiful. I always tell you guys that I take trades that reach about 3% of the whole structure. When I place the 90% rule right here and the trade reaches about above 3%, then I know that this trade is a good trade. Okay, towards inside this trade, how I took the trade, there was an insurance entry right there. I took a reduced risk entry. This is a 1, 2, 3 insurance entry, which is seen beautifully on M15. So we've got this 1, 2, 3, an insurance entry, and price commits towards the trade. But however, now price had taught me a lot of patience into this, because what does price do? What does price do? Price now consolidates for over 8 days. So during this 8 days, I had some trouble with, not being able to take quite setups because I don't like to add more trades while I've got a trade that I'm holding. So was it worth it holding the trade? I could say yes, because the play was bigger than the minimum target, which is 6%. But however, price did not reach my TP, and it eventually took me out for 4%, which I was neutral about it because 4% is good. It's good. It's actually not bad at all. So price had pulled back before reaching my TP, and I was taken out for the 4%. So the moral movement of the whole play for the trade was actually 9%. Reason why is it 9%? Because I see this as an inflation point. On high time frame, you can see this point is an area of interest. It's an area of interest. It's where the last volume was built. Okay, I'll move on to the second trade, which is AUD Swiss. On AUD Swiss, we've got this price action. So on this trade, I had taken a loss. This was an unnecessary trade. Okay, I've got the top value area at the top and then the bottom value area. I label this as an area of interest. I label this as an area of interest. I move on to H1. There isn't much to say on H4. So on H4, price is currently positioned in an area of interest, which was this area of interest. And then H1, price develops a 1, 2, 3. 1, 2, 3. We've got our 1, 2, 3 right there. Show you clearly our 1, 2, 3, and an internal non-structured continuation, which was this one, and I'd taken a reduced risk entry on M15. So price rejects towards this hook point where volume was built. It rejects there, and it rejects on a 1, 2, 3. So that was the indication for why was this trade good on my criteria. It was part of my plan, but because of my positioning, it wasn't quite good, and there wasn't a good sequence. So the sequence wasn't typical at all. Sequence wasn't typical. We've got, look at this. This is messy, and then I was looking into this continuation, and I take a reduced risk entry, and I was taken out for a loss. Okay, what did I learn into this trade? I've got a whole description towards what I learned within this trade. So within this trade, the trade was an unnecessary trade. Reason is price on high time frame is above an area of interest, which is this area of interest, and which could also be taken as an area of value. Okay, price rejected the area 3 times, and that is price telling me that it's an indication for direct bullish momentum. Regarding the trade idea, the trade is part of my plan as it had a hook point and a three touch, which is this hook point and a 1, 2, 3. Now 1, 2, 3 touch. I took the trade on an insurance entry. However, it does not mean every trade that looks good will go your way. Lesson learned: if price has rejected an area point on high time frame multiple times, but however forms a structure which indicates a pullback like this one, on AUD Swiss, staying out would be the best choice because trading around the area is too risky. This was a very risky trade which was unnecessary because the only thing I was relying on was the 1, 2, 3 and the hook point. But however, when you look into the trade, the sequence is not good, and the impulse from the dead touch is also messy. So this just wasn't a good trade idea. Yeah. So the sequence was not typical, and the impulse leg is not impulsive enough to consider the flag I was looking into. I have to pay attention to the details like this in the next coming trade. Yeah, so on AUD Swiss, this was a bad loss. This was a bad loss. This is part of trading. We have good trades and good losses, and we have bad losses. So we learn to watch trading each and every week. And yeah, thank you very much. I'll be recording my second content, which is for week 3, December trade recap. Thank you for diving into week 2. I hope you are able to see and learn from the AUD Swiss pair. And if you have anything to lay out and educate me, I would be more than open minded towards the trade.